Good afternoon and welcome once again to the Jason Leadership channel. This is where we break down complex trading topics into simple, practical steps. Now, today's topic is very interesting. It's based on markets analysis. And if you ever wondered how people make money trading currencies or what market analysis really means, then this is the perfect place for you to start. Now, you see, with market analysis, basically, it is how traders make sense of price movements, the market conditions, and the trend of the markets. This helps them make informed trades instead of gambling. So, your decisions when you want to take a trade, either you want to buy or you want to sell a currency, you first do market analysis. Now, market analysis is broken down into three categories. You have technical analysis, that's where you're reading price charts and patterns. You're looking at the charts itself and you're collecting data. Fundamental analysis is analyzing economic news, for example, the interest rates. And sentiment analysis is understanding what the crowd is thinking, because when we're trading, we do look at mass psychology and what the rest would be anticipating. So it's very important for you to have market analysis or to do your analysis, just to correct myself, before you start trading or start taking positions on the markets. So let's get into it, guys, and let's learn more. Let's dive deep into this, and we're going to slowly get to the finish line. Slowly but surely, we will get there. So, based on the Jason Leadership Program or Mentorship Plan, market analysis is an important step in understanding the condition of the economy. Why economy? Because we are trading currencies, and a currency comes from a country. And when we're looking at a country, we will look at its economy. That determines if it's growing or if it's declining. If it's growing, it will be positive, and we will consider it to be in a uptrend and bullish in terms of the condition. And of course, with buyers participating in that market environment. Now, the currency you are determined to trade, of course, you will have to start off with market analysis. Now, the importance of market analysis: trading without analysis is like driving blindfolded, to be honest with you. If you really want to protect your money and make smart trades, learn how to analyze the forex market, or learning how to analyze the forex market is very essential to your trading and your growth. So you don't need to be a financial expert. I will guide you step by step using real world examples. And there are free tools available for you as well, to further understand the information that I'm providing. So, market analysis outlines the market type based on a bullish or bearish bias. Once again, a bullish market is a market that's in an uptrend, and it is consisting of buyers and buying patterns if you're going to be looking at the technical aspects of the markets, and the bearish will be opposites where the market is selling. Next few videos that are coming up will be purely based on the bullish markets and the bearish markets, so we fully understand those two. Now, economic indicators from the economic calendar, they further contribute to any analysis conducted on a currency. So when you're looking at your currency on a technical aspect, when you're studying its trend, its condition, its participants, you then also look at the fundamental aspects, which will be the economic calendar. You can even watch CNN, you can even watch Bloomberg. There's news everywhere, social media, all of that impacts price. Even a single tweet I remember there was a scenario where Donald Trump and Elon Musk were Twitter battling. Tesla shares dropped on that very day, same day. So people who had sell trades, they had made very good returns in terms of their positions that they held when that was happening, and the shares or price started declining, or the movements of the market reversed or changed its character into a bearish market. Okay. So fundamentals will then also contribute to the direction of the market or to your analysis. So when you're trading as well, as a beginner, I just want to touch back on how important it is. Once you've learned your strategy and your technical analysis, you will be driven to make profits and focus more on your skill, which is okay and good. All right. But trading is not just analyzing. Analyzing is the nicest part of it if you do like technical trading, but you need to align all of these together in order for you to then trade on an optimal level. So we're gonna go through the slide we're gonna go through the slide through headings, or I'd say topics from A to G. We're going to start off with bullish versus bearish, long versus short, market conditions, technical analysis, fundamental analysis, identifying opportunities and threats in the markets and the market's behavior. Okay. So the first topic on the slide is bullish versus bearish. Now, by now, we do have a fundamental understanding of what is a bullish market or what is a bearish market, or the conditions in a bullish market or a bearish market, or how the market moves or trends, or when do we sell when the market is bearish, or when do we buy when the market is bullish. We do have an understanding of what impacts the market's direction in terms of positive news, negative news, but we haven't looked at the technical aspects as yet. So I want us to just fully understand fundamental analysis, because there's not much into it. It's just using the news, understanding if it's a positive, if it's positive data, my apologies, or negative data. Okay. So when we trade currencies, which is what we're going to be doing for the most part of our trading journey, we're going to be looking at the FX markets before we diversify into other trading assets. So when we trade currencies, we buy a strong currency, or we buy a bullish currency against a weak currency, which is bearish. And we sell a weak currency, which is bearish, against a strong currency. A strong currency will be bullish. So if euro is strong, or if the trend of the euro against the dollar is bullish and it's moving upwards, then we would want to buy the euro and sell the dollar. And if the dollar trend is selling, moving to the downside, basically, all right, or moving to the upside, and the trend is bullish, or the condition is bullish, then we buy the dollar. Okay. When someone says they are bullish, it means they believe the price of a market, like euro against the dollar, is going to go up. Bulls are very optimistic. They expect gains, and bullish means price going up. So again, if you think the euro USD is going to rise, you're bullish on the euro and bearish on the dollar. A currency that is strong would have a lot of buyers attracted, and the strong currency would be regarded as bullish as its value increases. A currency that is weak would have a lot of sellers and would decrease in value, as this currency would be regarded as bearish, right? And also here, on the flip side, bearish means you think the market is going to go down. Bears are cautious and pessimistic. They expect prices to drop, if you're bearish on Bitcoin, you believe its price will fall soon or it will go down. These terms naturally come from animals. The bull charge upward with their horns and the bears swipe downwards with their paws. Very simple, right? And how traders use these terms, which you'll hear traders say things like, I'm bullish on gold this week, the market is looking bearish after the news. These are quick ways to share the market outlook. So that's how we're going to be communicating as well. Long versus short. Okay. So the terminology of buying and selling in the market is going long or short. This is just terminology information. A long position trade. We go long when we're speculating the markets to buy and go up in direction. We only go long in a bullish market. Please note that. And we only go long on a strong currency. Buyers participate in a bullish market and go long and go long to hold these or to hold their profits while the market goes up in prices. If that made sense, okay? I just hope you understand. And also, when we're looking at the short position, which is sell, we go short, we sell when we're speculating the markets to go down in direction. We only go shorts in a bearish market. We only go shorts on a weak currency. So shorts is still like sell, sell, sell. We only sell on a weak currency. We only sell in a bearish market. But in just jargon, they would use that word. And to share market information effectively, sellers participate in a bearish market and go short to hold their profits while the market goes down in prices as well. That's holding a sell trade. Very simple, very, very simple and understandable. And just note that a bull would be up, and you think about the horns, and the bear will be bearish. You'll think about the bear claws. Now, this is a very interesting one. I really like this one because I always emphasize on market conditions, okay? That's very important when you are trading. Very important to understand the condition, or you can even call it market profiling because you're understanding, okay? You're understanding the profile and the behavior of the market, and you have a clear understanding when you're looking at the conditions of the markets. Now, the condition of the market basically would be based on it being bullish or bearish, okay? And they are the current behavior and structure of price movements. In terms of price, we'll make a quick example. If at 8 o'clock in the morning you wake up and Euro USD is trading between $1.20 or €1.20. 9 o'clock, it's trading around $1.45. 2 o'clock, it's trading between $1.65. So you can see that price keeps increasing every time the time changes. So we can tell that this market is basically bullish because prices are increasing as well. So that's another very important one to understand. My apologies. That's a very important one to understand as well. Okay. So a market only has three types of conditions, and by its nature, it only moves in three directions. We break these conditions based on the direction of the market, as now you have an understanding of a buying market which moves up and a selling market which moves down. And there is a third movement. If the market doesn't go up or it doesn't go down, it's probably moving sideways. And when it's moving sideways, it's basically readjusting itself to continue its movements either to the upside or to the downside. But we will get into the consolidation phase, which is the markets just moving in a staggered position or direction, sorry,
or moving sideways, just to have a clear understanding. So, market conditions are the current behavior, or is the current behavior and structure of price movements in the forex market. Think of it like the weather. You need to know if it's calm, stormy, or changing before making a move. Okay. This is when the market is clearly moving in one direction, either up or down. Traders use tools like moving averages on trend lines to ride the wave, but we're going to get into things like moving averages in future because those are just indicators you use in the market that collects data for you like trends and behaviors of the market. But we will get into that. So the market here, once again, only moves up, down, and sideways. And as market participants, we only want to be in the markets if we're moving up or down in respect to our speculated direction. A bullish market is a market showing signs of strength based on the currency being speculated in the market. So it would be in a bullish market, the price would be increasing and find new higher prices as time goes, moving up very strong and very sharply to indicate that buyers are in the market and they are controlling price for a further number of days or weeks. So you also, my apologies, so also a bearish market, just to make an example, at 8 o'clock in the morning, you would find that the price between euro and the dollar is $1.20. Then 10 o'clock, it has just decreased to $1.15. Afternoon, it's now trading at $1.09. So there's a decline in price. But that price, we're not going to be looking at the cost. We're going to be looking at the information, such as the movements of the markets, the condition of the markets, the trend, and that's going to maybe it will be making it very easier for us to just determine, okay, visually the market is moving in a down direction or in an upwards direction. So, a bearish market is a market showing signs of weakness based on the currency being speculated. The market would be increasing in price and finding new lower prices moving down. Finding new lower prices is that practical example of it trading from $1.20 to $1.14, $1.11. It just keeps finding new lower prices and it's moving in a very clean direction, or if so, I'd give you a visual understanding, painting a mental picture. Imagine a line that just keeps going down, 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 and all you do is just pressing sell and jumping in that trend. And the moment it goes down when you open sell, then you are in profits, for example. So technical analysis. I just want to also touch on technical analysis. This is a very nice one. And technical analysis will make, or you'll have a better understanding of it when we are looking at the charts itself. So it will be nice of you to have TradingView because TradingView is the platform we're going to be using to look at charts, how to understand or see the market condition visually, see the trend visually. It shows you you will see chart patterns that help us determine the market's next direction or to help us understand the behavior of the market. We'll see supply and demand areas, areas where we can either buy or where we can sell, or we can see visually where the market once bought and sold. So we use those footprints as information to help us understand that it is a good key area or a value area for us to buy because we can see previously there was buying momentum on that point. But we will be looking at the charts. Don't worry about that. We're going to get into price action, market condition again. with understanding bullish markets, a bearish market, a long position, a short position, which we went over just now on the previous slides. Currency pairs, we know now our major currencies. We have a little bit of history on the dollar, Great British Pound, Japanese yen, Swiss franc, their dominancy, the key roles they play in the global economy as to why they are called the major global eight currencies. Technical analysis as well, reading market data on charts, once again, chart patterns, supply and demand, how the trend of the markets, the behavior of the markets will all be found on the charts, which we're going to shortly move into. Speculating price movements with chart data, we're going to be looking at how the price moves with the information that we get from the charts. Opportunity, we're going to then find an area where we can take, buy, or sell positions when the market presents the opportunity to us. Okay. And we need to also build a strategy. Of course, the strategy will be us using all of this information to swiftly and participate, sorry, in the markets and make profits. We need to have full understanding of the market nature and the direction of the markets before we take a trade, because we don't want to be caught in the wrong side of the market because of FOMO or because of greed or because of not being patient and having the proper psychological skills. Okay, so things like that are very important. um Technical analysis, the strategies, they are, well, strategies have names. Okay, there's price action, where you're just reading the markets patterns and looking at the charts. Okay, it's basically the study of price movements on the charts. It helps traders predict future price direction based on past patterns using tools that are available. A technical analysis as well is just using charts to forecast future price movements, how the price will move in future. All right. And it is simple. Okay. It's simply how price moves over time. It includes, when we go into the next slides, you remember, well, if you've read the study guides or your study material, you will see basically wording such as higher lows, higher highs, lower lows. So that's included in charts and its price action. So you'll see trends, how to read all of this information. I will be helping you understand market behavior. And it also helps you not rely too much on news when you understand basically how to trade using technical analysis. And also, what's important is it shows you very important areas of where the market once bought or where the market once sold, basically. And those are just footprints that you can visually see that the market behaved in a bullish behavior at this point. So it's very valid of you to consider that area a buying area or a selling area, since you saw that the market behaved in a bearish behavior on that area. So fundamental analysis is a very nice one, and I believe we all understand fundamental analysis, where it comes from, and also how we can use fundamental information on the markets. So I can even be very brief with this one because it's very simple. It's not time consuming if I were to talk about this heading here. So it is trading the markets with the news, looking at news events. You will find them on the economic calendar. An example would be interest rates, inflation rates, and unemployment in the company. Well, sorry, in the country. My apologies. Um, Drivers of change, basically. This fundamental aspects of the market. It basically drives the movement of price, and it's very volatile. And remember when I said volatile, the market moving sharply and people using leverage. So this is where the abusive mindset comes, because you know when there's news, it's going to be a 1 minute, 30 seconds, 5 minutes movement that is very volatile, either to the upside, to the downside. So people do take advantage of that. I don't want to advise you to do so. That for me is very risky, but it is up to you. High inflation and high employment indicates a weak economy. Just an example of fundamental analysis. And weak currency, so we would sell the weak currency and buy the currency with strong indicators such as high interest, low interest rates would be a sell. My apologies, and low interest rates will be a buy. High employment will be a buy, low employment will be a sell, and good trade deficits, imports and exports. That's very important. If a country is selling more rather than buying more, they are making good money, and the GDP that comes in, which is also available to you in the economic calendar, is very good. So, identifying opportunities and threats, market opportunities. This will be an example based on fundamentals because we're not on charts. The America announcing more jobs added to the economy. That's a buying signal, that's a growing economy, and we expect to see first the markets using that information, or if I would say the markets digesting that information and then seeing a change in trend, and then we know that the buyers have entered the market, then we apply our strategy to enter the trend. So new trends or demands that can be optimized. So new trends, of course, comes from these fundamental news, and they provide opportunities for us to also use in terms of if we get also a good setup and the market's already we knowing its trend and its condition, it also gives us confidence. Like for example, myself, I would then want to use leverage, not abusively or aggressively, but the volatility that would come and help my or basically support my setup to play out, whether I'm predicting to sell or buy the markets. If I'm in a good position, I'm in a good setup, and my fundamentals play out, then things look really good, for example. So those are the opportunities that these fundamentals create. Threats will be negative news, okay? That's a threat to me. Policy changes like interest cuts or interest increases. Well, I would say interest increasing, while not interest being cut. But both of it, whether it's increasing or whether it's cutting, it wouldn't be a threat necessarily, but it impacts a mass audience, not just you as a trader, but there are investors out there. There are people with large capital who are in the market as well. So it would impact you on a low scale and impact people with bigger pockets on a larger scale. Changes in consumer, such as changes in consumer prices. I needed to include that, such as high inflation, low capital borrowing within the country. That's also going to be threats to other markets, I would say, because remember, these news here would either make one currency strong and the other market weak. So we would you look at threats in that manner in terms of who is impacted positively and who is impacted negatively. Market behavior. So, market behavior is very important. Again, this would fall more in the topic of, or not even in the, in the topic of charts when we're looking or studying charts. Market behavior is going to be very important. Okay. And it tells us a lot. Well, it gives us a lot of information about the markets or the currency that we want to be trading at that time. So it is based on the market's condition, whether we are looking at the forex exchange markets and we're looking at Euro USD or any major pair that we're trading at the time. And it tells us information such as if the market is bullish, the market will move in an upwards direction towards higher prices, and the participants in that market will be buying within the trend to the upside. So that's a buy trade itself. Okay. And Also, with that being said, the market will expand up and contract a bit down. So that's the behavior of a bullish market. When it's expanding, of course, it's increasing in price and creating new higher prices. And when it contracts, it will pull back, or we'll say it will retrace, or it will just lower, or it will change its trend for a term, short period. Say, for example, if the market keeps increasing in price for 2 hours, there will be a pause in that increase for maybe another hour or two before it continues up again in price or continues increasing in price. So that's just basically the parts of the market contracting a bit down or sideways before expanding further up to higher prices. The behavior of the market is also created by market nature, or if you're looking at market behavior, you need to align it with market nature, because market nature will then be how the market moves naturally, which is impulsive or basically corrective. And impulsive will be the market moving up where it's in a clean direction. Picture this as a line, a straight line moving up. That's impulsive. And when the line starts moving sideways and not in a very straight, clean line, then it's corrective. And as soon as the line starts going straight, then it is impulsive or it's expanding. So that's the nature of the market. So the market basically, when we're looking at charts, will only move in an impulsive direction and a corrective direction, which we will look at that, more practically in visual learnings. So don't worry yourself about that, because your mindset is on the notes. It's some people, as this video is for beginners, by the way. I'm not too sure. Yeah, this video as well is for beginners, and I'm not too sure, if you already have this information. But the point of it is raising, of course, a higher level of awareness when it comes to the market. You know, it's always good to go back, refresh, and understand basically things that you don't really focus on when you're on the charts. Because when you're on the charts, you always want to execute, be in the markets, running in profits, you know, running in losses in most cases if you don't want to pay attention to such information. So it's very important to just have the theoretical background and foundation and clear understanding. So when you're looking at the charts and prices and you're in the live environment where the market is moving and it's aggressive and it's choppy at some points where the direction is not clean, it's moving sideways, moving slow, things like that. You then go back to this and understand how the market moves naturally. You then understand how bulls behave, how bearish traders behave, you know. And when you understand the product very well, you then know how to do the business, you know. If there are spots or gray areas in your journey, those gray areas will hold you back, because you need to go back and then fill up those holes, and then everything will be solid and you'll have a proper foundation. So it's very important. And I thank you once again. Q&A sessions, anyone? Thank you very much. Next slide will be bullish market, then bearish market. Then all of this information will be applied on systems, and it will be applied also on the charts.